Hello, good morning, everyone. Uh, Welcome back to yet another live stream. So, with one of an expert trader. So, today's theme is more around how to trade expiry, right? Because it's an expiry day and everybody is excited. So, how we should trade in an expiry. And second is there's an event going on. So, what's the next thing that we should do? So, with me, I have guest who has a lot of experience in trading options. So, welcome, Shreyas, to the show.
Hi Kaushik, thank you so much for having me. It's a pleasure, as always, to work with ELM.
Yeah. Shish, I want to appreciate you for putting out all the logs and whatever trade you do. So you have been a transparent trader on all the social media platforms, and you have been mentoring a lot of traders. So I guess I want to appreciate your efforts.
Thank you so much, Kaushik.
Yeah. So, but Shreyas will start with the concept that how we should gaze market on expiry day. So, what should be the thought process?
Sure. So first of all, uh, today being an expiry and coupled with the fact that you have election results coming out, today is one of those days where a trader can make a lot of money or lose a lot of money. So the
Right.
first thing to do is to even decide if you want to trade that day or not. Now, the reason I'm trading is because on such a day, my idea is okay, I don't want to maybe make a lot of money, but if I lose, I want to cut my losses short. And because it's a high volatility environment, I'm allowed to take a high probability trade and keep a small stop loss on it. So, one of
Hmm.
two things will happen. And this is what happened yesterday and day before. Day before, I took a short volatility trade, but a very high
Hmm.
probability trade. It went against me at 30 rupees loss. I cut my entire trade, right?
Right.
Because
So
it was
short
at break even.
volatility. So for the benefit of our listeners, what is short volatility trade? It's IV crush and
It's
wicks
basically
coming cooling
IV
off.
crush. You are basically trading, saying that fear in the market is going to come down. Generally, if you're
Okay.
shorting options, if you sell options, it means that you are shorting volatility, because if fear goes up, option prices will go up on both sides, and if fear comes down,
Right.
option prices will come down on both sides. So that is
Right.
the idea.
Right.
So basically, day before yesterday closed at break even. Yesterday, in the first few minutes, I ended up taking like a 0.3% stop loss, because I'm taking a high probability trade which will work most of the time. When it doesn't,
Hmm.
I need to get out.
Right.
Now, today being an event and expiry, the premiums also still quite high, is also coupled with the fact that we have a massive gap up. So a lot of positions that are already there in the market will be stuck on both
Hmm.
sides. Initially they got stuck on the
Right.
downside, and then now they've got stuck on the upside. So
Upside.
there
Yeah.
can be a big volatility. And one more frame of reference is, in
Hmm.
previous such events, how has the market behaved? Now, in previous election results, there are times when market has moved 3, 4, 500 points intraday,
Hmm.
right? So
Right.
today I would say market has been very dull. Since the open, it
Hmm.
has been extremely dull.
Right.
Because of that, one would have benefited. But it's important to define before even entering the trade that, look, if you have a system, right, the
Hmm.
system is basically and across averages over a long period of time it has done well. Try to eliminate the extremely bad outcomes. And sometimes if you have to sit out and you eliminate the extremely good outcomes also, that's fine. But try to trade in the normal distribution center, when you know
Hmm.
for a fact that the market is pricing in higher risk, which means your reward will also be higher. And if you are not very comfortable, then there are two ways to trade it. One, reduce your position size and trade, which is what I have done. And two, keep like the same risk appetite as before. And if it hits your stop loss, get out. So I'll go through my
Right.
trade, Kaushik, and I'll
I'll
also
add your
explain.
screen.
Yeah,
I'll add your screen to the stream. Yeah. Done.
yeah. So first of all, let me take a look at what has happened in the market, right?
Hmm.
So if you see this gap down here, which was the
Right.
first time we brought 16,800, we had taken
Hmm.
support at 16,800 multiple times
Hmm.
before. Finally, within the Russia-Ukraine news broke, when Putin went live, that's when we had
Right.
this gap down,
Right.
right? After this gap down, we had a sell off. That day was a panic. Then we had a bit of a recovery. Then it looked like we were heading back into the
Hmm.
upside range. It looked like, okay,
Right.
16800, Ukraine Russia story done, whatever, is heading back. That wasn't the case. More news started to come, so we were
Hmm.
volatile in this range, and
Right.
then we once again broke this particular panic low.
Hmm.
When we broke this particular panic low, everybody was, now this was a time where you have to cut longs. It doesn't matter, because of leverage in the
Right.
system, you have to cut longs. Anyone who took a leveraged
Hmm.
sorry, not this particular thing. Then we had this gap down here, basically was where you absolutely had to cut longs. And
Hmm.
from there we have now seen that we came back into this range yesterday
Hmm.
with short covering,
Right.
and today have gapped up to basically the pre Russian war level, which is 16800. So
Right.
based off this, I've got some levels. Now what have I
Hmm.
marked? I've marked only these particular swings. See the multiple resistance here, I've marked here. We have taken support here multiple times, I've marked here. And these are also round figures,
Hmm.
16500,
Right.
16800, right? um, and now, because I know that one, it is an expiry, so OTM options will go to zero. Secondly, there is an event, which means there
Right.
can be a lot of volatility. What I'm assuming is on that, on the upside, this level should more or less hold. Going
Hmm.
by this particular data, that it was
Right.
previously a support many times. But at the same time, given that shorts are stuck in this system because of short covering, it's very possible that we head higher also.
Right.
That's why there's risk in the market. That's why somebody is paying for any particular option. And on the
Right.
downside, after gapping up over 16500, 16500 becomes a good support, because psychologically speaking, we have now opened here. If we dip, we will see a buying. So basis that, I come up with my strike selection in the
Hmm.
morning. I will go over what exactly my entry trade is. Look, I
Right.
always trade strangles. But what is first thing I have to decide is what is my risk appetite for the day.
Hmm.
My risk appetite for the day is about maximum of 2 lakh rupees, which is on the sizing that I'm trading, a little
Right.
more than 10 points. It's about 12 points. 12 points means 12 rupees. Currently,
Hmm.
my trade has, you can say between these two strikes, it has about 14 points in it, right?
Right.
So, um, that is my risk appetite. So what I
Hmm.
will do is, same basis this chart. The
Hmm.
16800 is a resistance. 100 points
Hmm.
above that is 16900.
Hmm.
I'm selling the 16900 call option, right?
Okay.
16500 is a support. What do I do? 100 points below that is 16400. I sell the put option. So my
Put
entry
option. Okay.
position,
Hmm.
my entry position was 16400 put short, 16900 call short. It's the most headacheless trade, but it will make me more than 1% return on my capital.
Right.
Let me go over how I entered, right? So here is my entry position. Initially,
Hmm.
just for a quick crush, I shorted about 5,000 quantity of 16500 put.
Hmm.
After that, I shorted 16400 put, 16900 call,
Hmm.
16900 call, and 16400 put. So this is
Right.
my entry position. And on average, I shorted it for about 23, 24 rupees. My orders also got stuck in validation. And also that
Right.
initial 5,600 quantity of 16500 put that I had sold, I squared it off and moved it to 16400.
Hmm.
Okay. So what happens here? From where
Hmm.
we open, we take a resistance, because this has also acted as a previous resistance, right?
Right.
Whoever is carrying long positions, whoever carried long positions yesterday, they start to book profit. Now, because of that
Right.
profit booking, market is coming down. But
Hmm.
despite the market coming down, my position from my entry has been in the green. The reason for
Right.
that is, every day in the morning, there will be a little bit of a spike in IV. Suddenly, people
Yeah.
who are stuck in positions, they will be
Hmm.
exiting. See, when do premiums hold value or go up? When people are exiting their positions.
Right.
So I have used that as their exit as an opportunity for me to enter.
Hmm.
So market has gone down into the
Hmm.
down move, where I shorted the 16400 put. That time it was trading at around 12. It was holding the same value, but in case the market continued to go down, I would have a problem, because my 16900 call had gone down to 6 rupees.
Hmm. Okay.
So what I did there is, I squared off. I purchased back my 16900 call, and I sold
Hmm.
the 16850 call. You can see here,
Okay.
for 6
Huh.
rupees I've purchased back, and for 9.5 rupees I have sold the 16850 call.
Hmm.
What am I doing? I'm trying to keep my premiums equal. Between the two,
Hmm.
I'm trying to keep my premiums equal. And as long as I am continuing to make a profit, I will keep balancing premiums. There are two
Okay.
places where I will stop balancing premiums. That is if my stop loss for the day, which was 2 lakh rupees, is hit, or if I'm in profit and I'm trailing that profit and that profit is starting to come down. I'll generally
Hmm.
set in the first half up to 5 points trailing, second half up to 3 points trailing. So it depends on the current nature of volatility in the market.
Right.
Anyway, so market went down. I moved my call options down. You can see this particular call. When I moved it down,
Hmm.
first thing you have to do is have a stop loss. So I moved
Right.
it down and I had a stop loss, which was the basically this candle.
Hmm.
This particular high of this candle is 14. So my idea was that if it goes above 14, I need to exit this call and move it back, which is exactly what happened once again. So my stop loss started to hit. You can see around 15, 16, I have squared off above 14. 15, 16, I've squared off and moved my call back to
Hmm.
16,900. So what am I doing at all points of time? I'm more or less trying to stay in a manner wherein
Hmm.
my premiums are roughly equal. Now the premiums are all gone. It's the first half,
Right.
a lot of reduction in premium. So I will not now be balancing. Now it's about watching what happens in the market and deciding. Uh, and the idea is even if I doing this just back and forth, make about 20 points, that is 1% on my capital. Now,
Hmm.
here I'll just go over. See, if I
Hmm.
buy hedges for 1 rupee,
Hmm.
the margin required for this trade would be 27 lakhs, which
Hmm.
means if I buy 1 rupee hedges for this and I'm trading the
Hmm.
same 16,700 quantity, then the margin required would be 1.8 crores for this position. But
Right.
because so the same trade can either return for me much more, right now it's going to return about let's say 1%. If I
Hmm.
use hedging benefit, it will return 2%.
Okay.
But I will also have to take proportionate risk. So if I'm
Hmm.
taking half a percent risk right now, I'll have to be
Hmm.
taking 1% risk at that point of time. Just give me 1 second.
Right.
I
Shreyas,
believe the audience can't see the screen.
yeah,
This
exactly. So can we shift to a light theme? Maybe then they'll be able to see. I guess the
Okay.
dark theme
All
is
right.
making them.
All right. Give me 1 second. Where is the settings?
You'll have to go to my profile
Yeah,
and from there.
yeah. They finally forced me to change. I guess for a day. All right. Where is the thing? Default, is it? Okay. Is it
Huh.
better now?
Yeah.
Is it better now? Okay. So right now,
Uh,
what am I looking
Screen
at
is
in
still
this?
looking blur. I don't know why,
Okay. Okay.
but I
All
guess
right.
now we should be able to see your screen. Yeah.
Okay. Yeah. So now let me go over. For example, this call option has 9 rupees, but this put option has 5 rupees. Why am I not
Hmm.
selling a put option worth 9 rupees? That's because since morning, there
Hmm.
has been a massive fall off already in put options. I do not
Hmm.
want to see. If you see, my put option has only 5 rupees, but it is
Hmm.
still here, right? If
Hmm.
we at any point break the day's low, this will trade at 20 plus.
Hmm.
So I don't want to take that risk. Instead, what I'm doing is, in case market continues to go up, you see now we are at risk of, so we tested once, tested twice, we are at risk of taking out this day's high. Now, if we take out this day's high, this call option will bleed, and this put
Hmm.
option doesn't have any value to help me. It can
Right.
only give me only 5 more rupees for the rest of the day. It's not going to
Hmm.
help me. So what is going to be my idea instead?
Hmm.
You see this swing high at 12.5,
Hmm.
this particular swing high here at 12,
Yeah.
12.5 to 13. If this
Right.
call option goes here, I will just
Now.
I will just square this off, and I will then sell the 16950 call option, which is now trading at I put it here. 16950 is trading at 5 rupees.
Hmm.
What I will do is, if this goes to 12.5, so I have a 3.5 rupees stop loss on this, then I will square this off and I will sell that option, which will then be trading around 6.57 rupees.
Right.
Is that making sense, Kaushik? So it's
Yeah.
not
Yeah.
about always permanently instantly balancing
Hmm.
premiums. It
Right.
doesn't work that way, but it's
Huh.
more or less like, at different points, either adding risk or removing risk. Now my trade
Hmm.
is dead. Look,
Hmm.
look, my trade, there's not much left. It'll dilly dally here and there, more or less. I'm not expecting to make any adjustment unless this call option goes to 12,
Hmm.
12.5. Right.
Right.
So by this way, first of all, I've already covered my risk for the day. My risk
Hmm.
for the day was 2 lakhs. I've already
Hmm.
covered that risk. So now my risk for the day, I will be minimum. I mean, no matter what kind of volatility plays
Ah.
out, more or less, I can assume at break even, I'll be exiting the market. My
Hmm.
target at the beginning of the day itself was 1%. If I
Okay.
targeted higher, then I should have had a higher risk appetite.
Hmm.
And I can target higher in two ways. One, take more premium. I try to accept around 25 to 30 rupees. If
Hmm.
I want higher risk, then I should accept between 35 to 40 rupees, or use hedging benefit, as I was just going through over here.
Hmm.
Use hedging benefit to reduce the margin. See, right now the
Hmm.
margin used here is 4.2 cr. Right,
Hmm.
4.2 cr is the margin that is available to me. That's how much I'm using. And
Right.
uh, in case I wanted to take a high risk. Now, if you see,
Hmm.
about, I would say, 6 months back or so,
Hmm.
I was trading about 40,000 to 50,000 sizing.
Right.
But there are two things that came up there. There is a huge execution risk with my current way of executing. So I use zero the APIs to
Hmm.
place orders. And even
Hmm.
with that, there is a lot of execution risk. Like, for example, Kaushik, if I
Hmm.
place in one shot 30,
Hmm.
40,000 quantity of Nifty buy or sell on any particular strike, I will
Ah.
move the price against me by 5-10 rupees.
Okay.
And if I move by 10 rupees on 30,000 sizing, that's 3 lakhs of slippage.
Hmm.
And when will I do that?
Right.
Obviously, if I'm exiting the whole quantity at once, it is in a time when there is momentum and stuff like that. There, the
Hmm.
slippage can be even more. It can go up to 20 points, and it's painful
Right.
to deal with that.
Yeah.
But when you're trading, when you're keeping your size smaller, my
Hmm.
execution efficiency is better because as of now, I'm working from home. Parallelly, I'm
Hmm.
having some stuff developed to make my
Hmm.
execution even better than what it is. So
Hmm.
until then, this is where I'm comfortable. This is what I'm trading. So that's kind of how it works.
Right.
And yeah, all
So
right.
how do you enter into a trade? So it's a manual entry where you keep pushing orders, or it's entirely through this API.
So it is a
That's
manual entry. It is
uh,
a manual entry, and I have a video on how. Basically, I have a program. What it
hmm.
does is, Nifty maximum quantity that you can punch in one order is 5,000, is 2,800,
Right.
right? So what I do with this program is, I here have written 5,600, 5,600. If I
Hmm.
just give the command here and here,
Hmm.
it will
Hmm.
instantly execute whatever size I put. Even if I put, let's say 11,200, it will break it into four orders. It'll
Okay.
break it into four orders and place. So that's called order slicing. And I have another
Hmm.
mechanism here which limits my
Hmm.
slippage. This is called market protection. If I set
Hmm.
market protection, I've had this program developed specifically for my needs. If I
Hmm.
put market protection of 8%, and I put 8% because I'm dealing in OTM options, what it
Right.
will do is, let's say I'm selling a 10 rupees option, it will
Hmm.
sell for 9.2, which is
Hmm.
8% cheaper than the LTP.
Hmm.
And if I buy
Right.
for 10 rupees, it will place the order for 10.8. So that, one, I get order execution, and two, my
Hmm.
slippage is limited, and there is no freak order that can take place.
Hmm.
Right?
Right.
Yeah.
So
So,
now, yeah,
yeah, so
go
that's
ahead. Go
more
ahead,
or
Shreyas.
less that's more or less how my trade works every day,
Hmm.
Kaushik. It's literally one of the most boring ways to trade, and there's
Yeah.
no excitement, there's no thrill, and there's no fear. If my stop loss hits, I'm out for that day. This is how,
Right.
like, the daily process repeats. And obviously, the target and stop loss also varies depending on what day it is. And I also
Hmm.
choose not to trade whenever there are big events. Whenever there are big
Hmm.
events, either I will choose to trade with a minor stop loss. Let me just go over also. For example, the last entire few weeks have been pretty all over the place. So let me just show you what I mean. You see, the last few weeks, yesterday I
Hmm.
took a stop loss of 1.5 lakhs. Day
Right.
before yesterday, I took a stop loss of 30,000. Last week,
Hmm.
there was a lot of volatility, so I didn't choose to trade on some days. I took a stop loss of 1.7 lakhs. I took a stop loss of 88,000. I took a stop loss of 2 lakhs. The idea
Hmm.
is, so this entire period when there was volatility, either I'll make
Hmm.
big profits. This was,
Hmm.
for example, a day. I'll make big
Hmm.
profits, I'll make moderate profits, or I will take small stop losses.
Right.
It's that is the only situation. And one more thing that I want to point out is,
Hmm.
apart from doing, for example, trading, what do I do with my trading profits? I buy stocks. Like for
Hmm.
example, when we fell below 16800, after that every
Hmm.
200 300 points, I was
Hmm.
converting, let us say, I was sitting on 40% of debt and cash in my
Right.
portfolio. I was converting about 5% to 10% of that into stocks. Like for example, when we fell to, this was March 7th. This is when we
Hmm.
fell. On that day we fell to,
Hmm.
what's it called, 15 600 thereabout.
Hmm.
I purchased all these stocks. Now I didn't purchase with all my money.
Hmm.
My idea is, even if we continue falling till 14,000, I'll be able to keep buying, right?
Right.
And that really works out, because my investments over a long period of time actually have done very well,
Right.
right? Either buying just ETFs, or looking up, for example, what are the components of some of the well performing PMS funds, and you'll find that
Hmm.
all of them have market leader number 1, market leader number 2 in
Hmm.
any particular sector that has, that looks to have a good future. And that's all you
Right.
need. You don't have to, like, it doesn't take rocket science to say buy HDFC twins and
Hmm.
Bajaj twins when they keep falling. Yes, they
Ah.
will continue to keep falling, but neither you nor me will time that bottom. So you don't know.
Right.
So having a plan is important. And I'll tell you a version of a plan that I have.
Hmm.
Now, if I
Okay.
have already 60% debt and 60% equity and 40% debt,
Hmm.
and let us say you have 10 lakh rupees that you want to
Hmm.
invest, for every
Right.
200 points, invest
Hmm.
50,000 to 1 lakh. Either buy
Hmm.
ETFs. See, when everything falls, sometimes people
Hmm.
get confused. What am I supposed to buy? Right?
Right.
Buy ETFs. You have Nifty Bs, you have
Hmm.
Junior Bs, you have this Kotak Alpha, you have all of
Hmm.
these particular ETFs. Just buy ETFs. You are not a genius at picking stocks. Don't
Right.
try. So yeah.
So, what's your method of this shopping? That if market falls, you have to buy some portion of it.
Yeah. So I will wait for the same levels from which
Ah.
I have been buying, like, and over a period of time, those levels will get discounted. Right now, for
Hmm.
example, my next cash purchase will be at 15,500. Now, let us
Hmm.
say, for the next 3 months, we head higher and whatnot, and take out. So it'll all depend on where was the previous extreme low.
Hmm.
I have been buying from the time when we broke 17,000, and I brought all the way till 15,500. My next purchase will be below 15,500 only, unless
Hmm.
we spend. Let us go to the daily. Unless, for example, let us say, and I'm not saying this is going to happen. Let us say we head higher, right,
Hmm.
and then make a second dip. Then again, I will start purchasing from 16,500 level itself.
Okay.
So it's about waiting for a particular channel or a structure to form. And
Hmm.
then, as long as we continue to remain in that structure, buying at the lower end. Now, for example, uh, I can't immediately see, if I was a momentum trader, I would buy as we broke out from 16,800. I'm not a
Hmm.
momentum trader. I try to
Hmm.
look for a bargain, because my
Right.
portfolio is not about the next 6 months or next 1 year. I'm going to keep working for for the next considerable period of my life, which is minimum 20 years. So I'm going to
Hmm.
keep investing in that period. So actually,
Right.
and I keep saying this, I see a lot of people look at their portfolio with anxiety when it is
Hmm.
looking red, when the market is
Right.
going down. It is not something to look at with anxiety, because the longer period you can buy with a lower cost bias, the better it
Hmm.
is for you. If I'm somebody who's about to retire, I have my investments in equity, and then it's going down, then I should be
Hmm.
concerned. You're
Right.
going to be an earning person, and hopefully that earning is going to grow year on year. Then you should always use opportunity.
Hmm.
I saw many people. They said stop your SIPs once
Hmm.
15,800 was broken. See, there's logic in saying 15,800 being broken is you have to get out of leverage longs. Anyone who was carrying longs at that point of time was
Hmm.
just not. That's not good trading. That's
Right.
potentially self-destructive trading. But
Right.
leverage longs. But if you're adding little bit in cash with a plan to keep adding, there's absolutely nothing wrong in that.
Right. Because eventually, over a period of time, that is going to grow.
Yeah, because your
Yeah.
rupee cost, the cost will keep coming down, right? See, if you don't, some people said stop your SIPs, very prominent people.
Hmm.
If you stop your SIPs, then your average is going to remain stuck at higher levels. See, when you're a
Higher level.
trader,
Yeah.
you do opposite of what investor does, right?
Hmm.
So if you're a trader and investor, that mindset creation of my trading has nothing, trading, you'll buy
Hmm.
what is going up and you'll sell what is coming down.
Right.
But investor can't think like that. Then you won't
Right.
make money. Many people
Right.
would have exited their portfolios. I had asked a question also on Twitter. Like there was some portion, some 10%
Hmm.
portion who said, okay, we're just exiting our portfolios. And
Hmm.
then you won't survive in the market because you bought high, you're selling low,
Right.
provided you bought the right things. Now that's also important. If you
Yeah.
bought the wrong things, and then it's a whole different ballgame. But I'm talking about the likes of Reliance, your HDFCs, and Bajaj Finance. So you don't have to worry about those.
Right.
And Asian
So,
paints, for example,
uh,
right? The crude went up immensely.
huh.
Now, input
Hmm.
cost for Asian paints is crude. Basically, Asian paints is something that can be traded as like an inverse trade to whatever crude is
Hmm.
doing. Right? Crude is going
Hmm.
up, short Asian paints. But that doesn't change the fact that, I mean, yeah, crude can keep going up, it can whatever, but it's not going to stay at such high elevated levels for a long time. I mean, the
Right.
concept is simple. Whenever anything is overbought for a long time, it has to revert to its mean. So
Hmm.
when you see that a company like Asian Paints is heading to
Hmm.
2000, you can buy. And
Right.
yeah, so anyway, yeah, go on,
Right.
Kaushik. I think I
So,
hijacked a little bit.
no, no, we are getting a lot of questions. So,
Yeah,
uh, Paramjeet Singh is asking, when do you book profits on the stocks and ETFs?
I don't. I've never booked.
Never
And
booked.
this will vary depending on your investing style. Now, if you're a
Right.
momentum investor, you have to book profits somewhere. I am a investor. I call a retirement investor. I'm
Hmm.
going to at retirement. I'm going to have a portfolio that
Hmm.
it would have been built up over the entire period. Even COVID crash, I didn't sell a single stock. COVID
Right.
crash, I bought at every level with all the cash I had. So COVID crash, I took a hit in trading on my positional trades,
Uh,
exited all that. After that, whatever cash was there, I basically at some point went down to
hmm.
close to, I think, at 10% cash left.
Hmm.
At that point, you have to buy at times like that. Why is the market selling off to that level? Because people had leveraged positions. See, that's an
Hmm.
opportunity. Whenever
Right.
people with leverage, they're desperate to get out, not because they think that company is worth X or Z. They're desperate to get out
Hmm.
because their position, they don't have the margin to hold it anymore. And their
Right.
broker is going to square it off for them. So
Hmm.
they are desperate to get out. They will get out at any price because they're losing, not because those companies are completely worthless. And of course, if people say, what if the world ends? Well, if the world ends, you have bigger problems than your portfolio drawdown. That's not
Right.
uh, how it works. I've never sold. I've
And
never sold, and unless there is only one condition where I will sell,
uh,
and this has been the case wherever I've sold stocks. If
right.
something about the company and its business or its promoters changes, then I will probably exit. But otherwise, I don't see any reason to exit any of my stocks.
Right. And I guess everybody should here learn from Shreyas, his calmness and patience. His positions are working and he's still calmly answering all the questions. So thank
That's
you,
because
Shreyas.
Kaushik, no, that's because Kaushik, most people think that once you're in a trade, you're very busy. If you're a scalper, you probably are because you're watching candle to candle. I told you, this is 12.5 is my stop loss on this. At that
Right.
point, it was trading at 9.5. It
Hmm.
is not hitting. So what have I got to do? I'm not going to
Yeah.
keep now. Look, where is also on the put side my next balance
Uh,
going to come? If this comes down to 5 and this put starts to break out about 8 rupees,
hmm.
and I'll go over by 8 rupees. Okay. Okay. So actually, till about 9.5, I would say.
Hmm.
If that put starts goes to 9.5, I'll square that put off and move it down.
Hmm.
It's not about, I'm not going to constantly be looking at the market. Data doesn't change very quickly. Like for example, let's
Right.
say I've taken a look at the open interest has been very simple. Despite the up move, 16700 call didn't see any massive unwinding as such, as
Hmm.
at least whatever OI built up.
Hmm.
17,000 call way out, we don't have to think about. As
Hmm.
far as what one should be looking for over here, 16700 will have the maximum straddle positions built up. Let's refresh
Hmm.
this. Okay, 16 700 and 750. Okay, let's say 16 750. Now look at
Hmm.
16700 straddle price over here. So 16700 put is trading for 46, call is trading for 65. Let's say it's trading for 110 rupees, which means market is pricing in 110 rupees on the upside from 16700, 110 rupees from the downside, which is 16600. So that's the risk that's being priced in the market. 16600 on the downside and 16800 on the upside. I am
Ups.
trading much further than that. I'm trading 100 points below that put side risk, 100 points above that call side risk. So, um, as see, now here will be an interesting thing. Initially, into this up move, the
Hmm.
puts got completely crushed. We made a swing
Hmm.
here and we headed higher. We didn't manage to break this high. So, we made a lower
Hmm.
high here. And now we'll
Hmm.
have to see if this low is broken, then that will be a confirmation of a lower high and a lower low. At that point,
Right.
this call will basically give up all its value. It will go below 5 rupees. And this put will slowly start inching towards about um, 9.510. At
Hmm.
10 on 10, I will square this off and I will roll. See, I don't
Hmm.
want to take risk on event days. If I
Right.
had initially shorted a much closer trade, I
Hmm.
see people, for example, who shorted, let's say, closer trades, like a 200-point strangle instead of a 500-point strangle in the beginning,
Hmm.
they would be sitting in a good profit into the IV crush. I did not
Hmm.
take that trade. So now I cannot take that risk. So my entire thing will be to reduce risk in the direction of risk.
Hmm.
Now see this put option as we break 16700 is gaining a little bit, still not near my stop loss. But in case that stop loss is hit, I will take risk off. An additional thing I can do is bring down my call also. I can
Right.
bring this down here, and that
Hmm.
also is likely for me to do because we have not made a new day's high and we have made a
Right.
confirmed low, like a lower low here. I can bring
Hello.
it down once again. It's trading at let's say 12 rupees. I'll set a stop loss of 15 rupees, taking a
Hmm.
small amount of risk and
Hmm.
balancing my delta, you
Right.
know. So that way, see, the thing is it's only 11:30, and if I take risk off on this put right now, there'll be very
Hmm.
little credit left in my trade. There's no need to
Right.
rush. The market will do its own ups and downs. I know I'm far enough away that I'll be able to lock in profit and adjust my trade before a move. So yeah.
Right. So there's one interesting question. What skills
Hmm.
are required to do your kind of trading?
See, so it's about first of all, your kind of trading doesn't remain the same. My kind of trading has changed a lot over a period of time. At this point, I'm doing this because this is relatively more slow paced, and I like the definition of risk reward that I'm targeting 1% and 0.5%. For any form of trading, more or less, the skill set will be the same. You have to be a very disciplined person as far as your trading is concerned. I mean, it's not that discipline does carry over, but as far as your trading is concerned, you have to be a very disciplined person. You need to be like an objective person, like just because you have a trade, you should not make a view. Just because you have taken a short trade doesn't mean you feel your analysis market will go down. So we all have biases. To be able to recognize, okay, these are my biases, these are my shortcomings, and accordingly pivoting to that is
Hmm.
what is really important. So
Hmm.
apart from that, look, initially depends on your capital. When my capital was when I started intraday trading series, I think 1 year 3 months ago, that time my capital was at about 2.5 crore. How like my account value was half of what it is now.
Hmm.
At that point, I was willing to take 4% 5% risk in a day, and
Hmm.
but sorry, I was trying to make 4 to 5%, but I was also taking 2.5% risk, Kaushik. Now
Right.
there I was comfortable doing that because as a value
Hmm.
of itself, it wasn't such a big number, right?
Right.
So I would use hedging benefit, I would use leverage, I would trade
Hmm.
higher premium strikes, which means
Right.
lower probability trade. Now I don't feel like doing that because of, as I spoke, the execution part of it. So I will trade with a lower risk appetite. So I don't think there's any set rules that this is how you have to be.
Right.
Characteristics. It's just that you have to be a disciplined person. You have to be objective person, and yeah, that's those are the main skill
Right.
sets that are needed.
So the next question is, Shreyas sir, how did you learn all the things? With experience it comes or something else? And I want to take it forward. I want to ask you what's your journey and how did you land up uh, doing intraday trading and this kind and you adopted this style. What was the journey?
So the journey, see, the journey basically I started off. doing cash equity mean reversion, which
Hmm.
is basically any stock gaps up, I used to sell it. Uh,
Hmm.
See, now what is happening is the puts are gaining, but the calls are not particularly giving up. So I will be rolling down part of
Okay.
my calls.
Uh-huh. Okay.
So the idea is if this goes
Hmm.
below 11 and this starts going above 9, I will roll down one third my position lower. Yeah. So see, I started
Okay.
off that way. Look, there's no excuse for experience in the market. You can't
Hmm.
substitute experience in the market, and you
Hmm.
have to put in the time. Now, I started with one style,
Hmm.
transitioned into something else, that became something else. As every 6 months, it was almost a different style until I found what I'm comfortable doing. And it all comes down to practice, and practice with a small enough capital, and taking less risk, so that you survive the market. It's people say this again and again, but that's the only truth to it. If you survive in the market long enough, the market will teach you everything you need to know.
Right.
Everything you need to know, you will learn from experience. You will do research, you will study, you will look at how things behave. Like, for
Hmm.
example, if you go theoretically read that, okay, when you're doing a strangle, manage based on this delta, or when you do a calendar spread, this is how it should be managed. When you read that theory, it's very different. When you trade it, even if you trade it with one lot, you the learning that you get, nobody can give you. You will not
Right.
attend any. See, look, there is some great value content out there, be it video content or written content, but you will get nada from it if you don't practice it, if you don't try it out. Only when you've put your hand in on the fire, you will know what it is, right? And
Right.
there's no substitute. If you mean what kind of skill set one needs to be like you, or what kind of this thing they need to do like that, it's just about you have to practice. You might practice and find that, what, trading a certain style really suits you. Maybe you're
Hmm.
somebody who just wants to trade diagonals and calendars, and you're very comfortable managing those positions. Go for it. There
Right.
is no like one size fits all or one characteristics fits all kind of this thing.
Right. So, Shreyas, have you traded Bank Nifty?
I have.
And do you
I
trade Bank Nifty?
I used to trade Bank Nifty mostly for like iron flies and double diagonals, stuff like that. Whenever Bank Nifty IV is low, trade double diagonals and Bank Nifty. I do not trade Bank Nifty intraday, simply for the reason that with my current execution, in times of momentum, I get terribly high slippage on Bank Nifty.
Okay.
It's
Right.
extremely high slippage, and also Bank Nifty naturally pivots towards people who have higher risk appetite.
Hmm.
For example,
Right.
if I'm targeting, like I said, today I'm targeting 1%, or I give up 0.5%. If I'm targeting 2%, I'll trade Bank Nifty.
Hmm.
So it's kind of like that. Bank Nifty is
Right.
much more volatile, obviously, but the premiums also price that in. It is a personal
Right.
preference at the end of the day.
Yeah.
Do you want to trade this or do you want to trade that? That comes
So,
down to the individual at question.
right. So we got one question: how effective is 1,000 points strangle in Bank Nifty?
Now, I don't trade Bank Nifty intraday, so it would not be my
Yeah.
thing to comment. Uh,
Right. That's the reason I asked. So, yeah, Shreyas, tell me what's happening with the trade. So,
So at this point of time, look, a lot of positions were built. I was checking earlier
hmm.
in between 9:30 to 10 o'clock. A lot of
Hmm.
straddle positions were built for around 130, 140 rupees at 16,700
Hmm.
at that point of time. So we've more or less pulled back there. My real
Hmm.
threat will be, see, we have headed lower, but the thing is we might head lower here and once again pull back to 16,700, because
Right.
a lot of money has been put around
Right.
16,700, which means too quickly I don't want to like move away from this particular
Hmm.
strike. So what I'll be
Right.
doing is I will once this is once this goes to about 9.5, I will roll down this call here.
Hmm.
If you see in the
Okay.
past 40 minutes, there hasn't really been much of a mark to
Hmm.
market change
Hmm.
in the position. So at this point,
Right.
I will be rolling down first part and then a little bit more of the
Right.
calls to
Right.
16,850. Now, what will be the stop loss on this? I'll go over that also. 16,850. Now, what will be the stop loss on this? I'll go over that also. Now, what will be the stop loss on this? I'll go over that also. 16,850. Now, what will be the stop loss on this? I'll go over that also. 16,850. Now, what will be the stop loss on this? I'll go over that also. See, so you can see how I placed that order, and I have
Hmm.
11,200 quantity of call short, which is over here.
Hmm.
Earlier also I had shorted this call, but I had to take a stop loss on it. Now
Hmm.
I've moved down, let's say two-third of my position here, and roughly
Hmm.
where I'll be exiting this will also be around 14.
Okay.
That is a 17. That would be too high, around here. So high of this
Right.
candle, this particular candle here, I'll be
Right.
exiting this. Right.
Right.
So
I guess
so
this is a very easier way to place orders.
yeah, you need to work on how can you get your order execution um,
Right.
uh, right, because it's a very important aspect of trading.
Hmm.
You need to be able to execute instantly. For example, if I want to get out of my position, right, I just need to type here 16,700, 16,700. I buy back my entire position. It's done in under 2 seconds. Some
Hmm.
big panic move,
Hmm.
as you trade and as you start trading at scale, you'll start doing all these things wherein you try to improve your execution efficiency.
Right.
Yeah,
So now we have moved half of our quantities.
we have moved two-third of our quantity.
Two third.
So
Okay.
yeah, so two-third is here and one-third is here. So if you see the weighted average price between the two, it'll be roughly about 9 only.
Hmm.
So the 11,200 into 11 and 5,500 into 6.25. You see the weighted average, roughly it will be
Hmm.
around 9 rupees, which is how much is there on my put option.
Right.
Yeah.
I guess this is a very interesting learning for all of us, that seeing you execute trades in live market.
Yeah. I post all of my, I have an entire, I think this is the first time I'm live. I
Live.
generally,
Yeah, exactly.
yeah. So, yeah. But basically, Kaushik, it's not rocket science. It's just about what I showed you earlier. It's about, did you
Hmm.
take these stop losses? If I didn't take
Right.
yesterday 1.5 lakh stop loss, my position would
Hmm.
have ended in about 14 lakhs loss.
Hmm.
Just FYI. Like, so this
Hmm.
1.5 lakhs loss I took instead of a 14 lakh loss. It's about, look, I've defined my risk. I have to exit at that point. I can't keep holding on to the losing trade. You cut your losing
Hmm.
trades, you trade the way I do, you'll make money. I guarantee it. You
Right.
provided you cut your losing trades in time.
Ah.
Like right now, for example, into the bounce, this is coming back up. I decided
Ah.
about 13.5, 14, I'm going to exit it. I have to exit it.
Right.
I can't hold it. Even last time, if you see, in the earlier day, I've already taken such a stop loss. um, you can see here I've purchased back the 16,850 at
Hmm.
basically I started from 15.9 and then 16, 17. I
Hmm.
purchased it back. After that,
Right.
it has gone further higher, right? I'll show you.
Hmm.
You see, this is kind of where I purchased here.
Hmm.
After that, it
Ah.
has gone up all the way till 22. So
Right.
I would have lost there. I had to exit it, and then I had to take re-entry, as once again we were looking a little bit on the weaker side. Now this is heading
Right.
to my stop loss. I will have to exit it. So I
Hmm.
will wait for this 14 to be taken out. So it comes down to that, Kaushik. I think there's no rocket science in doing expiry
Right.
strangles. You will make money most of the time. It's very, very, very rare for you to not make money. But there will be times where against some 1 or 2 lakhs that you were planning to make, you will lose much
Hmm.
more,
Hmm.
which you should not be accepting. Do we have any more questions, Kaushik?
Yeah, we'll take a couple of questions. So there's one question: how do you decide or analyze your morning trade? Mostly you take for IV crush, or it's what's the method of taking morning trades?
So the method of taking morning trades. Okay, give me a second. Um, See, there are two things. One, where is SGX indicating? Where are we going to open? Where does the pre-market settle? And what are these
Hmm.
particular swing highs and lows? I already went over what my analogy here was. Sell 100
Right.
points above call option, send 100 points below put option,
Right.
and We are coming off of a higher IV
Hmm.
environment. Um, so there can be an IV. See, you don't know. Sometimes there can be an IV crush. There can be an IV increase. As you practice more, as you trade more, you'll understand where is it likely for you to have an IV crush. Because if there has been a steady down move and that is increasing
Right.
IV, then an up move will crash IV. So stuff like that you'll get only through practice. Um,
Hmm.
but more or less, I think even in my video with Vivek sir, I went over exactly how it is that I select my strikes, and it all depends on how much risk do I want to take in a particular day. I
Hmm.
mean, obviously, it has to be above and below the particular support and resistance level, but it comes
Right.
down to how much risk I am willing to take. So this particular call option, it hit my stop loss. So yes, if I had not moved down my call option, it would have been good.
Hmm.
I would have made a little bit more profit, but it's fine. It hit my stop loss. I've moved back
Hmm.
up. In case we
Right.
continue to go down and I had not moved my call option down, then my
Hmm.
call option would not have had enough premium.
Right.
Actually, every adjustment I do, Kaushik, I'm giving up a little bit. I'm giving up
Right.
some. Okay,
Hmm.
because the idea is by giving up that little bit, I want to reduce my risk in whatever side is being tested at some point of time.
Hmm. Right.
The reason I also made the adjustment is if you really go in here, I'll tell you. So this is minor but can be seen.
Hmm.
Hold on. Yeah. This is kind of forming a channel,
Hmm.
which is a lower
Right.
high and a lower low. If we have a
Right.
breakdown, it comes to the this thing suddenly out of nowhere, this put option, which was that time at around 9, will shoot up
Hmm.
to minimum 13, 14. Whereas my
Right.
call option would have gone off to 5 rupees and it doesn't have anything to give up.
Hmm.
Is that making sense?
Yeah. 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 Right.
Yeah.
I
So
guess
that
now
that
I'm
is
able to
the
understand. Yeah.
yeah. So for example, how much more will this trade make for me the rest of the day? This has, let's say,
Hmm.
8 rupees, 5 rupees, 13 rupees. 13 rupees
Hmm.
into 16,700. Basically, this trade will make a good about um, 2 lakhs, you can say. 2 lakhs more,
Hmm.
right? 2 lakhs more, which means my trade will probably end around in the last few minutes. I try to make an additional 1 2 points or whatever, it'll make me 4 lakhs against my margin, even without hedging benefit. That's 1%. Now what,
Hmm.
there was a event risk, there was this, that, whatnot. What do I care? I'm
Right.
making my 1%.
Right.
Yeah. People say, why so much difficulty
Uh,
to make 1%? Like you can do it with scalping. Look, I can scalp, but if I was scalping, my sizing would be maybe 2,000, 3,000, 4,000.
hmm.
If I'm scalping at the money or in the money, I'm not going to I'm not going to scalp with 20,000 sizing, right?
Right.
I can use my entire margin here. Look, yeah, as a scalper, and we were having one of my friend and I were talking about also. If you have a small account, let's say you have a 1 lakh account, probably you can double it in a day, or
Hmm.
lose that 1 lakh also. So it's possible.
Right.
I can't do that with my capital.
Right. So we have
So
next question.
hmm.
What's the success rate uh, of this strategy, and how many trades do you take in a month?
So the success rate of this strategy, I would put somewhere around number of profitable days at around 70%.
Hmm.
That is roughly, and the success rate goes up drastically on a
Hmm.
Wednesday and Thursday. Um, uh, and how many trades do I take in a month? See, it depends on the nature of volatility in that month. It depends on if there are events or not. Most of the time, if they're big events, I will choose to shy away from trading.
Hmm. Okay.
Generally on Mondays, especially if it is in a normal market and a gap up on Monday, I'll choose not
Hmm.
to trade because there would have been a fair enough fall off in premium over the weekend. So stuff like that. I trade almost every day. I would
Right.
say in a month, I trade out of, let's say, 20 trading days. I'll probably
Hmm.
trade for 16. So 80% of the days I will trade.
Right.
Yeah.
So this next question: what do you
Hmm.
do if one of your leg hits stop loss?
You saw, no? This leg hit my stop loss at 14. I
Hmm.
squared it off. I moved it to the next leg. So 16,850 call hit the stop loss. Moved it to 16,900, and the stop loss on
Hmm.
this earlier was 12.
Hmm.
So the same stop loss will hold.
Right. So idea is, so I guess the person who has asked the question. So idea is to manage the premium on both the legs. Right,
Idea is
Shreyas? So,
exactly, that's all there is.
right. Next question is, can we trade this straddle strangle if we are working full time somewhere
You
else?
can't.
And, huh?
One thing very clear, you
Hmm.
cannot trade intraday if you are not in front of the screen 24/7.
Hmm.
You cannot
Right.
trade intraday, it's just impossible. It is
Hmm.
uh, unless you have automated it, like one of my friends, is known by logical trader, Twitter handle. He trades fully automated, so he doesn't even have to do anything. He doesn't even have to switch on his algo. It's all done, and it'll do its own thing. So he goes to office, he does whatever.
Hmm.
Now if you, and he's developed it himself and whatnot. Now, if you can do all that, great. But as an intraday trader, you cannot. And I would argue, even if it's fully automated, you have to keep
Hmm.
checking if the system has failed somewhere or NSE has failed somewhere, so you have to
Right.
shut down your system. As an intraday trader, you have to look at the screen 24/7. uh,
Right.
if your trade is alive, you have to be at the screen. If you have done with your trade in the first 5 minutes of the market, fine. um,
Right.
yeah, you can't do this if you're a working professional.
Right. So the next question is, what are your trading habits and principles you follow? I guess this is something that I also want to learn from you.
See, it's the same thing, Kaushik. My trading philosophy lies around the fact that I will keep making, even if it is um, uh, 2, 3, 4% in a month, I'm very happy with it. I will not take overnight risk. Many people, no, when they see that overnight my entire margin is sitting unused, it
Hmm.
almost pinches them, saying, "Why don't you take some or the other trade? You'll make a little bit of money." I don't want that,
Huh.
because I have got lucky before,
Huh.
in dodging
Right.
some really bad situations, and I
Huh.
don't want to push my luck ever again. I have worked for a very long period of time to build my account to what it is. I'm not going to give that away in some whatever. People say you can sell 1,000 points away call option. What if
Huh.
we open at upper circuit? It's very low probability. I also know that, but I don't want to. I don't want to. You know, it just, I'm not interested in trying to inch out every small return that I can. If if I'm not comfortable, if I'm not feeling well, also if I have like a fever or something, I'll sit out the trading day. So
Hmm.
that day will not be there in my book. Doesn't
Hmm.
matter. Why am I?
Right.
I'm not in a rush, and I think it goes a long way when you're not in a rush. You're not desperate to make money somehow. See,
Hmm.
if you're not desperate to return money on your margin, you'll actually take the good trades, wait for the good opportunities.
Hmm.
Uh, so, so that's how I look at that. And
Right.
yeah, cut my risk in time. That's my only philosophy, and it can be an entire trading philosophy in itself. Cut my risk in time is
Right.
what it is.
Right. And that's relevant to all the traders, whether whatever your style is, you have to keep your risk in check.
Yeah.
Yeah. So, Shes, one more question. This is interesting. So, do you keep any stop loss order in any of your leg? Because there might be sudden rise or fall in 1 minute or few seconds that could lead to capital blow up.
So there are two ways to answer this question. If I'm trading at the money, there can be an instant blow up. Out the
Hmm.
money, instant blow up is very rare. Okay,
Hmm.
so that's one of the reasons. So initially, I used to be trading straddles, then making inverted strangles from straddle position, going back into straddle. The reason I trade strangles is because the mark to market will change very slowly. Even if there is
Hmm.
a 50-point candle, it won't immediately cause a big spike. Because when you're
Hmm.
trading at scale, you don't want to take slippage into such kind of gamma moves and momentum. I do not keep my stop loss in the system when I'm trading strangles because of freak executions. Like for example,
Hmm.
and this happened to me many times, if I set a stop loss on this with a trigger at, let's say, 12, it's
Hmm.
trading at 6.5, I'd set a trigger of 12. um, Randomly sometimes it will get triggered randomly,
Hmm.
like it's in this thing, and it'll get executed with slippage. So I've stopped doing that. There is one kind of person that absolutely has to have stop loss in the system. That is people who don't have the discipline to exit once their risk is met.
Right.
if they don't have the discipline to exit once their risk is met, those kind of people
Hmm.
cannot trade without a stop loss in the system. I don't keep it in the system because the slippage risk, the misexecution risk is much higher than the risk of me not actually exiting the trade. So
Right.
yeah,
Yeah. So there's one question that I want you to answer is, so how should a beginner approach this strategy with say 20 lakh capital? Is it different from trading with 4 crore capital?
definitely. So if you're trading with a 20 lakh capital, you can trade 2800 size, 2800 sizing. Right now, with hedging benefit and all that, you can try to target higher returns. For example, if you're trading with 20 lakhs 2800 sizing,
Hmm.
10 points will equal about 28,000 rupees, which is still 2.8% return. You can target higher returns because you will be trading with hedging benefit,
Hmm.
right? And secondly, you can probably try to also have a delta risk wherein you can try to um, uh, when the market, if you feel, is going towards a particular resistance, you can keep a negative delta. It's going towards the support, you can keep a positive delta. You can have more delta risk, where definitely much more delta risk when you're trading with smaller capital. But when
Right.
you're trading with much bigger capital, I would
Hmm.
prefer to take as less delta risk as possible once the capital starts to increase.
Right. So, Shreyas, the last question that I want to take is how you increase your uh, capital or maybe the next equity curve in your trading. So, maybe when will you increase your capital of trading?
It will increase on its own, Kaushik. If you go over my equity curve, there is
Hmm.
only withdrawals. I withdraw every month,
No, no.
or
The
I
question is,
uh,
let's say right now you're deploying around 4 crore capital, right?
correct.
Roughly. So, when will you
Yes.
increase that capital, deployed capital for trading?
See, out of that 4 crore, it comes from margin, right? So right
Hmm.
now, if you see also, my cash balance is 94, and the rest of it comes from my equity holdings and
Hmm.
stock holdings. As this
Right.
cash keeps going up, it gets transferred back into debt and equity, which is in my collateral. So automatically the margin goes up. At the beginning of the year, the margin available to me in my account was, beginning of the financial year, around 2.8 to 3 crores. Now today, because market is down and my portfolio bleeding a little bit, it's at margin available is 4.3. But at one point it was 4.6 also. It'll keep growing as my profits grow and as my holdings grow, and with
And you'll
including
keep
withdrawal.
deploying that capital.
Compounding, yeah, it's keep compounding. It's all about compounding. And like, putting in the same capital, I don't need to bring in any additional capital, because as you can
Right.
see, with my current capital only, because of execution risk, I'm trading one third the size that I can trade.
Hmm.
For example, you take my trade here. Let me go over. You take my trade here. Let me just show you margin required for this. So
Hmm.
margin required for this, where will it show? Okay. Okay,
Let's
let
say
us
for me,
buy.
I have a capital, but I don't deploy it on trading. So I do it with
Okay.
set quantity. So
Okay. Okay. See, the same thing if I buy hedges,
hmm.
334 lots, 334 lots. Margin comes down to 1.7 crore from 4.2
Hmm.
crore. I
Right.
can do that because this hedge is only 1 rupees, and I
Hmm.
can like triple my size if I want to. So I can make three times the profit, but I have to also take three times the risk. And I'm not
Right.
doing that because I have an execution problem right now, which I'm working on. So I don't see any reason why I need to increase my capital anytime soon. Look,
Right.
even if you
So
even if you
when you will
manage to do,
decide that you should increase the deployed capital?
when I have an apt strategy, see, right now with my current capital only, I'm looking at ways to diversify into a few other strategies and running a lot of tests on what those can be, and
Right.
at the same time working on execution. When I have a particular strategy that can execute with X amount of capital, and for that, it makes sense for me to bring in more capital, I will do that.
Right.
But apart from that, it's not on the cards.
Right.
I will compound what I have. I don't need to add any additional capital. And that has been
Right.
what I've done the entire period. So the same
Hmm.
thing will work for me.
Right. So, Krishna Dev is asking, what is your biggest mistake that you made in your trading career? Anything that you remember?
Uh, Look, you make all kinds of mistakes. I I don't know if I would categorize anything as single biggest mistake. I mean, I've made all the mistakes. I've averaged into losing
Right.
trades. I've taken bad trades, revenge trades. But I don't think any singular mistake has cost
Hmm.
me. There
Right.
are times I got lucky, squared off the trades in the right point of time, with or
Hmm.
without knowing the kind of risk I was holding. But I don't know if um, I don't know, Kaushik. I don't think any particular thing I can say this was my biggest mistake.
Yeah.
No.
Because Shreyas, you're a disciplined trader, so maybe you would have not made a bigger mistake because of the discipline that you follow in trading. So, Shreyas, can we revisit the trade? Uh, One last time, we'll revisit the trade so that we can sum up our
Sure.
learnings today, and then we'll end the stream. So,
Yeah.
for all the viewers, if you like the stream, if you have liked our interaction, Shreyas knowledge, then please like the stream, share it with your friends, let the learning keep compounding also. Yes, Shreyas, over to you.
Yeah. So see, Kaushik, actually nothing has changed in the trade from when we started talking till now. Market has been extreme, exactly there. So
Hmm.
nothing has changed, but there has been more or less the premium also is trading at the same point. We took one stop loss on this because
Hmm.
we shorted this call and moved up. But at
Right.
this point of time, there is about 11 rupees in this
Hmm.
trade, right?
Right.
And currently I'm sitting on a 12 rupees gain. So overall for
Huh.
the day I'll be ending at 1% unless I get further stopped out on this trade. So the
Hmm.
trade is dead because the current nature of market is very volatile. I do not want to move closer. See, if
Hmm.
it is like other previous normal expiries, as the day goes on, I'll move closer from both sides, keep taking in
Hmm.
more credit, taking in more credit,
Hmm.
increasing my profitability. Currently I'm just not comfortable. This is more of a personal
Hmm.
thing. I'm
Hmm.
not comfortable moving closer because the
Hmm.
markets have been very very random. If
Right.
anyone, whatever analysis you do, whenever there's a
Hmm.
news driven global uncertainty market, its behavior is basically all practical purpose random.
Hmm.
So I don't want to take much risk in such period.
Hmm.
So instead I will just try to sail through, and
Hmm.
in the meantime, try to book even if smaller profits, keep booking smaller profits, taking quick stop losses. That's why I'll not be moving in closer today. Maybe in the
Yeah.
last 1 hour I might, for example, if we go to the last 1 hour, and if these two have completely eroded, I might
Hmm.
try to take an additional 5 to 8 points, but that's about it. I will not be
Hmm.
taking risk in a time when things are the way they are.
Yeah.
In fact, I was telling you, Kaushik, that there's a good chance I'll not be trading today
Uh,
because it's election result. So
right.
yeah,
So when we
yeah.
were planning this stream, so me and Shreyas were having a conversation. Shreyas told that it's a election day, so maybe I might not be taking a trade. But I guess today you are with a heavy, very heavy quantity.
No, actually, it's relative, Kaushik. I'm
Yeah.
trading generally. I've been trading between 15,000 to
Yeah.
23,000 size. It also depends on how much margin is required. Today, margin is actually
Right.
surprisingly high.
Right.
That is required. So yeah,
Right. So Shreyas will do one more live session with you. So I guess this is a very
yes,
interesting concept. Someday on expiry, as only will plan one more session.
yeah.
So thank you, Shreyas, for joining in. Thank you all of you for joining in. So if you have liked the stream, share it with your friends. Like the stream, comment. So you once you keep commenting on this video, we get to know what you want to learn, what you want to learn next, right? So whenever Shreyas comes next on the channel, we'll ask him all those questions that you wanted to ask during the live stream. So thank you all for connecting. See you. Take care.
Thank you guys for joining. Thank you, Kaushik. Take care.